Glencore will retain its coal and carbon steel materials business. That's after consultation with shareholders. The Global Resources Group's chair says the expected cash generative capacity of the unit significantly enhances the quality of Glencore's portfolio, both by commodity and geographically. And this broadens the firm's ability to fund and grow its copper assets while accelerating shareholder returns. The announcement comes alongside the release of Glencore's half-year results. Adjusted earnings before interest, tax, depreciation and amortization fell 33%. That's as lower average prices for many of the group's key commodities during the period weighed. Glencore has maintained its production guidance for the full year. The JSE has reported flat interim profits. That's as the company, which operates Africa's largest stock exchange, felt the impact of lower equity trading activity in a challenging economic environment. The group's efforts to protect itself from this are yielding results, albeit at a slow pace. The proportion of its revenue from non-trading activity rose by 1.8 percentage points to 38.6% during the period. Looking ahead, the JSE says its capital expenditure of 29 million rand remains focused on protecting its core business while growing new business lines. Quilter has reported a 28% rise in profit at the halfway stage. This reflects strong channel flows and progress in delivering on the firm's efficiency initiatives. An interim dividend of 1.7 pence has been declared. CEO Stephen Levin has described the wealth management firm's performance as strong and added that the work being done to transform Quilter is delivering tangible results. Discovery has announced changes to its Vitality unit. The financial services group plans to create a global composite with uniformity in strategy, product and technology. Currently, the Discovery Group consists of three business composites: Discovery SA, Vitality UK and Vitality Global. More information on the move will be provided in the group's full-year results, which will be released on the 19th of September. And Altron has announced that its former CEO and non-executive director, Robbie Fenter, has died. A statement from the group says his outstanding contributions and leadership made a lasting impact on the technology industry and business at large. Fenter was CEO of Altron from 2001 to 2017. Further afield, Apple's agreement with Google might be in jeopardy following a U.S. judge's decision that Google's monopoly is unlawful. Let's take a look at this package report for more.
Apple's lucrative relationship with Google could be at risk after a judge ruled that the search giant is operating an illegal monopoly. The Alphabet-owned firm pays the iPhone maker $20 billion per year to be the default search engine on the handsets. That's according to analysis by Morgan Stanley. But analysts say avoiding antitrust penalties could require terminating the agreement. Instead, users might be prompted to choose a search engine. It's estimated ending the exclusivity deal could knock up to 6% off Apple's profits and leave it looking for new options. One might be to offer alternatives like Microsoft's Bing. Another could be to develop a new search product, maybe powered by OpenAI. Apple has already said it's bringing the firm's chatbot to its products, but it's also in talks to offer Google's Gemini bot and other AI models, which analysts say is a sign it's worried about doing more exclusive deals. Apple's search engine pact with Google runs until at least September 2026. Legal experts say wrangling over the monopoly ruling could last just as long, and maybe go all the way to the Supreme Court.
And German factory orders rebounded in June. This due to a significant improvement in the auto industry. Here's our reporter, Anatindevu, with more.
That's right, Ndowling. German manufacturing orders rose in June, in fact, for the first time in 2024. And as you mentioned there, this was significantly driven by the industrial sector, where orders were up 3.9%, which were higher than the prior month. And with more on this, I'm joined by DW's correspondent, Chiponda Chimbelu. Chiponda, thanks for your time. What are the details of the latest figures?
Thanks for having me. Well, in June, orders in Germany's manufacturing sector rose 3.9% from May, according to the latest figures from the Federal Statistics Office, Der Status. Now, factory orders rose for the first time in 6 months. That has boosted some hopes that Europe's biggest economy could be gaining some momentum. Now, the German economy shrank last year, partly due to a slowdown in its industry. The rise in June was largely attributed to stellar figures from the auto sector, where orders rose more than 9% on the month. Now, overall, the rise in factory orders in June was actually driven more by domestic activity rather than foreign orders.
Ms. Chiponda, what's the sentiment on these figures?
One leading German economist called it an anemic recovery, so they are not celebrating the figures. What they want to see more of is positive data in other areas before speaking about an economic resurgence in Germany. Now, even the government is warning against too much optimism. The Federal Ministry of Economy said a broader recovery of industry is unlikely for now because of the subdued mood and weak demand abroad. Germany is an export-dependent country. Exports account for more than half of the country's GDP. So what the country needs is robust foreign demand so that exports can drive economic growth. And there things aren't looking good, especially in China, Germany's largest trading partner for goods last year. In 2023, the volume of trade between the two countries decreased 15.5% on the year. And right now, the Chinese economy is facing its own challenges. Add to that, EU-China trade relations, they have deteriorated over the past 12 months. Now that means that China may no longer be the reliable destination for German goods that it once was.
I guess the last question to ask there, Chiponda, is on future prospects. What's the outlook for the German economy?
Well, the German economy had a weak performance in the first 6 months of the year. In the first quarter, GDP only grew 0.2%, and things got worse in the second quarter, with the economy contracting 0.1%. Another decline would mean that Germany is in a recession. Now, the rise in factory orders in June was mainly due to the jump in the auto sector. Now, that is, of course, an industry that is going through its own challenges as it pivots from making combustion engine vehicles to electric vehicles. Sales for EVs fell 37% in July. Now, that is, of course, the biggest drop since December, when the German government announced that it was ending a subsidy for EVs. And it gets worse. Across the EU, car makers are selling fewer electric vehicles. A few weeks ago, Germany's biggest car maker, Volkswagen, cut its profit forecast for this year. Its subsidiary, Audi, announced that it is discontinuing production of an EV model made at a Belgian factory, which it is reportedly planning to shut down. So the auto industry order jump seen in June may not be a trend that's here to stay.
Chiponda, thank you so much for those updates. Let's leave it there for now. That was DW's Chiponda Chimbe.